Good morning, this is Tim McGowan for the Finance News Network. US equities were high in Wednesday trading, ending just off their best levels. US stocks clawed back losses from earlier in the week as traders cheered better than expected economic data that helped negate recession fears. Multiple data points regarding employment in the first half of the year hasn't reconciled with what usually happens during recessions, according to research by CNBC. For one, payrolls usually decline during downturns when they actually rose in the first half of the year. Personal consumption also grew at solid pace in the first 6 months, in contrast with historical recession trends. Overnight, the Dow Jones Industrial Average rose 1.3%, the S&P gained 1.5%, hitting its highest level since June, while the Nasdaq Composite increased 2.59%. The Nasdaq finished at its highest level since 4th of May and the S&P 500 since early June. The earnings season continued, giving investors hope that the market can recover and potentially start a new bull market as opposed to a bear market rally. The S&P 500 is up about 14% from its recent intraday low in June, and the Nasdaq is at levels not seen since May. The top mover amongst the Nasdaq stocks was Moderna, which surged 16% on the back of a blowout earnings report, and that move also boosted biotech stocks across the market. Overnight, best performing industries included metaverse and AR, finance, internet and retail stocks, while weaker industries included lithium and social media stocks. The only negative sector was energy, with the oil price down almost 4%. Interestingly, while the oil price has been falling, oil stocks are up. One reason is that the aggregate per share earnings for energy companies in the second quarter have beaten expectations by around 12%, according to Credit Suisse. Refiners, producers and multinational names like ExxonMobil are likely to post their best earnings results in more than a decade, if not their best ever. One metric that investors have been particularly focused on is free cash flow, which includes the cash a company brings in after paying for capital and operating expenses. Most oil producers are returning the majority of their free cash flow to shareholders via dividends and share buybacks. So the total cash return yield against the price of oil stocks is fairly high, keeping investors' money flowing into those names. Following free cash flow is certainly a thematic playing out on the ASX, with coal stocks at the moment, with capital management initiatives on the agenda as free cash flow drives share prices higher as investors see dividend potential. In commodity news, iron ore futures are pointing to a 2.8% fall. Gold has lost 0.74%, silver is down 1.22%, and copper is down 1.4%. Currencies overnight were all relatively flat. On the ASX today, the SPI futures are pointing to a 0.5% rise. This is Tim McGowan for the Finance News Network. Have a great day.